This is Kenny Tan. Welcome to Real Estate License in 14 Weeks. This is episode 30 of Starting from Zero. Today we continue with chapter 8. If you like my video, please give me a thumbs up, subscribe to my channel, hit the bell, that way you receive first notification of future releases of my video. And also please share this video with your friends. Let's talk about Statute of Frauds. In California, not every contract would have to be in writing to be enforceable. However, the law of Statute of Frauds requires certain contracts to be in writing in order for it to be enforceable. In other words, there may be certain types of contract that must be in writing and that must be signed by both parties. For example, in California, leases that is a year or longer cannot be oral, must be in writing. For example, if you sign a lease with the tenant, if you want to lease a property to a tenant but it's less than a year, and you agree on the terms orally, the question is, can an oral lease be enforced if it's less than a year? The answer is yes. However, if it is a year or longer, an oral lease cannot be enforceable. It must be in writing and signed by both parties. Another type of contract must be in writing, which is the sale of real property. The key is the word sale. If it's not a sale of real property, it can be oral. For example, the agreement between the father and the son, where the father told the son, if you don't get married before 25 years old, I will grant the property to you. I'll give the property to you. Now, as we know, it was an oral contract. It wasn't in writing. Question is, can that contract be enforced? Well, it is not a sale. It is not a sale of the property from the father to the son. It is a transfer. So it does not have to be in writing in that case. It must be a sale of real property for the statute of fraud to apply. Every single sale of property requires that it to be in writing and must be signed by both parties. Next, what about an agreement between two brokers to split a commission? And let's say, for example, I, as a broker, made an oral promise to another broker. For example, this broker refers a buyer to me, and the broker is from out of town. Let's say the broker is from Tennessee. And he called me up and said, well, I got a buyer for you. Will you pay me a commission? Will you split the commission with me after the deal closes? And I say, yes. And it is an oral contract. Now, an agreement between two brokers to split commission is enforceable, even though it is oral. So in other words, agreement between brokers to split commission doesn't have to be in writing. It can be oral. Let's talk about statute of limitations. What is statute of limitations? Well, the law specifies the amount of time you have to bring a lawsuit against somebody. How much time you have to bring a lawsuit against somebody will depend on the type of lawsuit. For example, for a trespass claim, lawsuit. Trespass means that somebody comes onto your property without your permission. That will be a trespass. For trespass is also known as encroachment. Trespass, the statute of limitation is 3 years. So in other words, if somebody trespasses on your property, you have a maximum of 3 years. After 3 years, you lose your right to sue the person for trespass. Next, judgment and action for judgment. For every judgment that you get from the court, if you want to enforce the judgment, you only have 10 years to enforce that judgment. So the statute of limitation for enforcement of the judgment is 10 years. Next, let's talk about the rules of interpretation of contract. There are two important rules. Rule number 1, written contracts supersede all previous negotiations between the parties. Let's say you and I, before we sign a contract, we went back and forth on the price of the property. Ultimately, our agreement, we reached an agreement and we reduced the agreement into a contract. So whatever that is on the contract supersede whatever we discussed orally. In other words, whatever that we talked about, going back and forth, we throw different prices. For example, we reach an agreement on the price of $1 million. Before that, you have offered 800,000, I want 1,200,000. See, these numbers are not important because ultimately they are replaced by the written instrument. So the terms of the contract on the written instrument will supersede everything else that we discuss. All that means is that whatever we discuss doesn't mean anything once we have reduced everything into writing. The second rule of interpretation of contract has to do with what if you have a standard form contract and then the parties through their negotiation decided to make certain changes to the standard form, and they use like an addendum. For example, the standard contract, it may say that the seller has to move out in 3 days or have to move out. There is nothing in the standard contract that allows the seller to rent the property back. See, sometimes when you sell a property to a seller may need more time. They want to stay longer on the property. It could be that they are waiting for the escrow for their next purchase to close, so they need extra time. So because it is not in the standard form contract, we need to prepare an addendum. So whatever that is on the addendum is known as the written form or the long form or handwritten part. If that part is different from the standard form, the longhand or written part supersedes the standard form. The standard form has the printed part. So the longhand, the written part supersedes the printed part. So those are the two rules of contract interpretation. Next, let's talk about novation. What is novation? Novation is regularly, frequently tested in the Department of Real Estate salesperson exam. So you need to know what novation means. Novation simply means that the parties enter into a new contract to replace the old contract. Say, for example, I owe you 500,000 and I'm supposed to repay you the 500,000 in 6 months. When the 6 months have expired, I have no money to pay you. So what I do, I offer you to have my house, which may or may not be worth 500,000. I say to you, I don't have 500,000 to pay you. How about you take my house and I'll give you the house and we used it to replace the 500,000 debt that I owe you. And you say, okay. So basically it's a use of the new contract to replace an existing contract. That's what novation means. You got to remember how it works. So basically it's the entering into a new contract which extinguishes the obligations under the old contract. That's what novation means. Let's talk about liquidated damages. If you're a buyer, you enter into a contract with a seller. Would you rather know ahead of time if you don't perform? What is your liability to the seller in terms of a dollar amount? So for a buyer, they want to feel safe that if they, for whatever reason, breach the contract, they know how much money they owe the seller. So if you fix the damages ahead of time, that's called liquidated damages. Say, for example, when you enter into a purchase contract with a seller, usually we give them like a deposit amount. And that deposit can be anywhere from a few $1,000s to up to 3% of the purchase price. Let's say, for example, the purchase price is $1 million. Legally, a seller cannot retain more than 3% of the purchase price, which is about $30,000. It can be less than $30,000, but it cannot exceed 3% of the purchase price. So if a buyer decides to put less than $30,000, less than 3% as deposit toward the purchase of the property, the liquidated damages on the residential purchase is normally limited to the deposit amount. So if you're a buyer, you don't want to pay more than as a buyer, you can decide how much money you want to lose in case you don't perform the contract. how much money you want the seller to be entitled to in case you breach a contract. You decide, because you decide the deposit amount. And that deposit amount is usually negotiable. For example, if I'm a seller, I want as much deposit as possible, up to a maximum of 3%. If I'm a buyer, I want to put down as little deposit as possible, and it's still acceptable to this seller. Let's say, for example, on $1 million purchase, I may decide to offer $10,000 as my deposit. So if I don't perform, that $10,000 is what we call the liquidated damages, because it's fixed ahead of time. That's all the seller is entitled to in case of the breach by the buyer. Specific performance. Sometimes what happens is that a seller changes his mind about selling the property. I'll give you a scenario. Let's say you open an escrow with a seller, and then 5 days before close of escrow, suddenly you got a call from the seller and said, I'm not in the mood to sell the property anymore. I just have a death in my family. Well, if a seller has a death in his family, that is not the proper excuse for not selling this property to the buyer. The buyer can actually sue the seller because there is nothing in the purchase contract that let the seller out of the contract in case he has a death in his family, right? So therefore, in that case, if the seller refuses to perform, what can the buyer do? Well, there's one thing the buyer can do. Because in the state of California, every single piece of property is considered to be unique. Because the real property is unique, the buyer can actually go to court and force the seller to sell the property to the buyer. And this type of lawsuit is known as specific performance. A specific performance, it's a lawsuit that a buyer brings to force the seller to perform, to sell the property to the buyer. And it is called specific performance. Electronic signatures. These days, it's very common to sign documents by docusign. In order for it to be legal, both parties must consent to signing the document by docusign. Well, normally when we open up a docusign, what's the first thing that we see? First thing that we see, it asks for us to accept electronic signature. It asks for us to give consent to bind ourselves to a document by electronic signature. So it requires consent by both parties for that to be a valid contract that is made by electronic signatures. This is the end of episode 30. See you next time.